Hey everybody, I hope everyone is doing well and had a good day. This is the overview of the Emini 5-minute chart for Monday, November 25th, 2024. Because it's Monday, we'll go ahead and start with the weekly chart. The market has been in this bull channel, and you can see we're late in the channel. And whenever Al says if the market does something late into a trend, he typically means 20 or more bars, and it's clear we've been in this bull channel or this bull trend for maybe 100 bars. So we're certainly late here. You can see a stronger tight channel here, a breakout, and then a pullback, and now we're in the channel phase. So the market's channeling up here, and up here we're late in the channel still. Even if you say the channel began here, we're still late in the channel. What we have is a big bull bar testing the bull channel line, and then bad follow through. So the bulls wanted a breakout and follow through here, breaking out above the prior swing high. They did not get the follow through. Now we have a high one buy above last week's high, but the problem with buying here, the way that I see it, let's say you buy above this bar and you take the high one. 1 times your risk below the bar, and your target is 1 times your risk up here. To me, it's not totally clear, or in other words, it's not 60% or higher probability that we're going up here before we test back down here. This is a high one, but it might be at the top of a trading range, if not the top of a bull channel. And this bear breakout looks like it's strong enough for its own second leg, so we may be getting a deep pullback, but I suspect we have disappointed and trapped traders up here. We had this big bull bar and then the bear bar, and the bear bar disappoints traders, it disappoints bulls, and it traps traders. It's a pretty decent sell-off, and you have bulls who bought up here trapped into a bad buy. You have bears who did not sell up here and they missed the sell-off, and you have bulls and bears both looking to sell up here. Bulls looking to sell out of their longs with a smaller loss, and bears looking to sell to get short and catch a second leg down, maybe one pullback, two. So I think the problem with buying here is that there's actually more sellers in this area. And we see the same thing reflected on the daily chart. You can see we have a rally, deep pullback, that's about a 50% pullback. And 50% pullback are common in channels and trading ranges. You can see here's the rally, we bounced at 50%, now we're testing the highs again. But the problem with buying up here is that this sell-off, like I just said, probably strong enough to convert the market into a trading range, and it'll probably get a second leg down, even if it pulls back first. And deep pullbacks are common in trading ranges. So the problem with buying up here, you're buying near the highs where traders got trapped. Buying high or not selling up here, and you have traders looking to sell at the top of this range. Also look at the rally. Good bull bar here, but lots of overlap. Doji, small bar, bear bar. Not a very strong rally. And then for the 5-minute today, we had a gap up on the open. It was a pretty big gap, but I like to keep an eye on the higher time frames and just have an idea of what the context is like. And because of what I just said about the weekly chart, the daily chart, I was a little suspicious about the gap up. And you can see, let's just draw. Here's Friday's high. I had to pause for a couple of minutes, so let me see if I can pick up where I left off. And if I ever say yesterday on a Monday, I'm talking about the prior trading day, so Friday. So Friday was a pretty tight trading range day. Here's the low down here. You can see we gapped up above the measured move of this day, of this trading range. So we're already above the measured move. Now the question becomes, is the breakout and so far bars 1 and 2 follow through, is that going to go for a measured move? But again, what I said about the higher time frame context, I wasn't so sure about that. I figured, to put it generally, I was a little more bearish on the day because of the gap up and where we were on the higher time frames. But here we had bars 1 and 2 on the open and the gap up. So gap up and follow through. But big tail on 1, but bars 1 and 2 strong enough for a second leg up. Now something really interesting with the first 4 bars of the day. Bar 1 is a reversal bar. We sold off and then we rallied. And then look at bar 2. It's a pretty decent breakout bar. Not a lot of overlap with the prior bar, closing above many bars to the left, and not very big, not climactic, so pretty good breakout. But then no follow through on 3. And if we take a measurement of bar 2, bar 3 is more than a 50% pullback. It's below that midpoint. So if we think about a smaller time frame chart, yes, this bar is decent, but why did we get a 50% pullback on the next bar? That tells me that we're channeling on a smaller time frame, and that tells me if we were to draw a trend line from the low of bar 2 to the high of bar 2, or the low of bar 2 to the high of bar 3 breaks that trend line. So now if we think through how major trend reversals happen, we have a bull trend line break, retest of the highs, and then the bears go for a major trend reversal. And that's all happening on the first 3 or 4 bars of the day. Rally, deep pullback, trend line break, retest, and then sellers for a reversal down. So yes, bars 1 and 2 are strong enough for a second leg up, but the pullback may have been on 3, and that second leg may have been 3 and 4. Buy the closed bulls on bar 2, disappointed with bar 3, and bar 4 tells me those bulls who bought here, whether you bought above 2, bought the close of 2, 3 disappoints traders who bought up here, and 4 retests those prices and everybody sells. Bulls get out of longs, bears sell. So now we have a micro double top, up on 2, down on 3, up on 3 and 4, and then down on 4, and a decent sell signal bar. Also, keep in mind, 80% of days have trading range opens, which means only 20% of the time we have trends from the open. And again, I go back to the higher time frame context. Big gap up, but probably high in a trading range on the higher time frames. And I'm expecting, in general, with no outside information, if you ask me to guess what the open is going to look like, I will tell you I'm expecting a trading range on the open 80% of the time. And that's what we have here. Big up, big down. So bear breakout, bar 4, and then an even bigger breakout, bar 5. But big up, big down, possibly the bottom of a trading range. Probably buyers below 1, but with this much momentum, 3-bar micro channel, bear bar, bigger bear bar, even bigger bear bar. This is probably going to get a second leg down. Bulls may not want to buy here, and those who did just scalped out on 6. Look at bar 6 compared to 3, 4, and 5. And just ask yourself, is bar 6 strong enough to reverse this? Probably not. And because of that, traders will sell above 6. They'll sell the close of 6, betting that it's a minor reversal. Any reversal will just be a bull leg in a trading range, and 3 through 5 will get a second leg down. And that's what we got here. Bar 7, it's a buy reversal bar, bare body but closed above its midpoint, but a bad stop order buy. 5 bar bear micro channel, sellers above the bar, and there's our second leg. Leg 1, pullback or pullback. Leg 2. But look at these 2 legs down. They're very tight. So even though we had an implied pullback on 6 and an actual pullback on bar 8, the high went above the high of 7. So even though we have pullbacks along the way, the channel down is very tight. And unless there is a significant trendline break, I'm going to think of all of this as just one leg. So even though we can count 2 legs, it's so tight that I know it's a breakout on a higher time frame. And I'll view this all as just one leg. Now if we think about the gap up, here's Friday's close, we gapped up, and we're getting bad follow through. This is a deep pullback. We're already below 50% of the gap, so we rallied, pulled back deeper than 50% at this point. And that's disappointing. You think about bulls who bought up here, bought 1, bought 2, bought anywhere. They are disappointed with the depth of this sell-off. And they'll probably use any rally they can get to get out. And then that gets into the market cycle. Even though I count this as one leg, I still notice the pullbacks through here. And the reason for that is the market cycle. Bear, breakout, implied pullback, or pullback, and second leg down. And now I'm expecting the channel phase. Breakout, pullback, channel. And I'm always paying attention to stop orders. So I said, bar 7, it's a bad stop order buy, but I'm still paying attention to it. And traders were trapped here. Bears who did not sell here missed out on that sell-off. Bulls who bought here obviously trapped into a bad trade. What are traders going to do on a retest? We know that the market cycle is breakout, pullback, channel, and the channel evolves into a trading range. So the start of the channel, somewhere up here, we don't know if it's the high of 6, maybe 7, maybe 8, but somewhere in this area is the start of the channel phase, which typically becomes the high of a trading range. That's what we have here. So look at the approach on bar 12 and 13. We rallied on 9 and 10, but then pulled back. Rallied on 11, pulled back, rallied on 12. This is already 2 or 3 legs up to resistance. And again, strong enough breakout, the entire sell-off from 3 to 9. Probably will get a second leg, and any reversal will be minor. And now we're getting a weak reversal attempt with several pushes up to resistance. And that's why traders sold above 12, sold the close of 12, sold the high of 7, anywhere in this area, and we got 13. Now, strong enough rally, 9 through 12 or 13, that this should get a second leg of its own, but it's minor. So, minor means trading range, leg in a trading range. You can expect deep pullbacks and delayed second legs. Leg 1, deep pullback, and then 14, 15 is your second leg. And in this case, the second leg was more sideways than up. We did not get above bar 13. Buy the closed bulls on 12, never got the chance to exit at break even. Also look at 14 and 15. Rallied on 14, pulled back, rallied on 15. 15 looks stronger. On a smaller time frame, it might be more clear, but to me, this looks like a nested second leg trap. Leg 1, pullback, leg 2, and leg 1, pullback, leg 2. And look to the left, we're still within the range of bar 13, a big bear bar, and all this is still within this big sell-off. So all these reversal attempts, to me, look minor. And the best case for the bulls here is probably a trading range. This is a fairly tight trading range through here. You're getting breakouts in both directions that will likely get second legs. We rallied, that should get a second leg. 13 should get a second leg. So we rally, deep pullback, second leg. We sell off, deep pullback, second leg. Then we enter a tight trading range. Now at this point in the day, we know, first of all, we know trading ranges, triangles, any type of trading range is breakout mode. So we don't think we're going to stay in this tight range the entire day. We're probably going to break out. The question is, are we getting a gap up, a deep pullback, breakout mode, and then a second leg up? Or are the bears going to get a second leg down after this? Bear breakout, sideways, second leg. At this point, we don't know. But what we do know, we know the overall context, we know higher time frame context, we know the gap up had bad follow through, and now we know that 3 through 9 is likely to get a second leg down, and I'm not sure that any of this is the second leg down for the bears. To me, it looks like a more sideways pullback, and we're still getting lower highs. So the bulls are not doing enough here. Even though they got a higher low here, the bears were able to continue to create lower highs. And that's a sign of strength by the bears. Also, if you look at the buying pressure and selling pressure through here, and you're looking for sort of a major trend reversal setup, sure, you can argue bear trend, trend line break, retest, major trend reversal above 14 or 15, but really not enough bars, and tight bear channel, second leg down likely, or at a minimum trading range rather than a bull reversal. You can also draw the triangle this way, and if you do, you'll see we had a breakout attempt on 18 or 20 down here. Bears tried a couple times. They failed, but the apex of the triangle was retested. So bear breakout looks weak, but then the bulls have a reversal attempt, and they were not even able to get back to the apex or the middle of the triangle. And then we got 24. And 24, it's a bear bar closing on its low. And then 25, another bear bar closing on its low. And then 26. So we're getting a bear breakout crossing the moving average, 4-5 bar micro channel. Now the bears may be getting their second leg. And the bulls need to do more. They need another trend line break. So the market's always in short. Okay to be short. Now we have a new breakout, and we can judge the strength of it. We can judge what is it breaking out of. The bulls hoping this is the bottom of a trading range. So if the bulls bought below bar 9, betting it's the bottom of a trading range. They're trapped on 26, and then there were plenty of opportunities for the bulls who bought here to exit at break even. But all of these are weak reversal attempts. Bear breakout, finally a pullback above 29, but terrible entry bar, 30. And then 31, another reversal attempt, a second entry, but not really a trend line break, maybe a sideways trend line break, but it's weak. And 24 or 23 through 28, likely to get a second leg down. And then you get 32, bear bar closing on its low. Low too short, which is occurring in what might be a bear trend, lower highs, lower lows, and just below the moving average. Also, the signal bar is strong, and you can see the good follow through, 33. Bulls exited, they gave up, they tried to reverse twice, they weren't getting it done, and we need to go lower to find buyers. And the bears, they pressed their bets, betting bear breakout, sideways pullback, low too short. They're going to enter and build their position below that bar. Another bear breakout, strong enough for a second leg down. We pull back 37, and then we get another breakout, 38, 39. Now 39, that's another bear breakout. But remember what I said at the beginning of the video. When you have breakouts that are occurring 20 or more bars into a trend, you have to be wondering if the breakout is actually exhaustion rather than a measuring gap. A common test target is the prior day's close. So I'll mark that. And there's other targets we can look for. Maybe a leg 1, leg 2 measured move for the bears. Leg 1, pull back, leg 2. That's in this area. Yesterday's close, Friday's close in this area as well. So there is some support here. 36, a trading range bar. And then II pattern, 37, 38. That's a possible final flag, tight trading range. A final flag, you expect one more breakout in the direction of the trend, and then trading range or possible reversal. So 39, we're getting sell climaxes. We're far below the moving average. 39, one of the biggest bear bars all day, especially through here. And again, late in a bear trend. So it could be exhaustion. In the first target, the bulls want to close the gap from the 39 close in the prior bar's low, maybe the 36 low, and then the top of the sell climax up here. And they did all of that in a hurry within 2 or 3 bars. So 40, that's what I would call a GTFO bar. If you are short anywhere for any reason, I would exit shorts above 40. I think bears have to get out above 40, and if that's the case, I think it's okay for bulls to buy, taking a chance that we get this. Also remember that trading ranges are areas of agreement. We made a tight trading range here, so the price was fair for 6 or 7 bars through here. We got a breakout, but then eventually we got a failed bear breakout. We came right back to this area of agreement. I just find that interesting. You can see we spent a lot of time in that exact same area. So what about the rally? Shouldn't it get a second leg up? Yes, this rally will probably get a second leg up. Pretty decent bull breakout. 41's a good bar. 43, we're getting a biclimax, pause, biclimax, pause, biclimax, but smaller. This is a parabolic wedge. Parabolic wedges are minor. What that means is that it's a wedge on a smaller time frame, but it's really a bull trend on a smaller time frame. This is a tight bull channel, and technically we can call it a breakout. There's no pullbacks in here. There are pauses, 42, 44. We can infer that there are pullbacks on smaller time frames, but all things considered, this is a pretty decent rally. The biggest problem with the rally is the context. Just look to the left. We have this big sell-off. So the reality is that this, although it looks pretty decent for the bulls, it's probably a leg in a trading range and not the start of a big bull trend. But second leg up, likely. But the problem is, if this is probably going to get a second leg, but it's occurring in a trading range, then you can expect a deep pullback and a delayed second leg. And that's sort of what we got here. We went sideways for a lot of bars. Tight trading range, bear breakout attempt, but bad follow through. Low one short, but at support. Support at the 42 high. And why is there support at the bar 42 high? Because 43 broke out above 42, broke far above the high of 42, far above the moving average, closed on its high. In a strong bull breakout, you had traders selling above 42. Remember, there are buyers and sellers on every tick. And you're going to have some traders betting exhaustion. I'll sell at the top of the sell climax. So you have traders selling in this area. It's a reasonable thing to do. But they were trapped on 43. Bulls maybe didn't buy, thinking we would bounce and go down here. And bears sold, betting that we would fall. But instead, we rallied and got follow through. So we've trapped traders, both bulls and bears, trapped here at the high of 42. So what are they going to do if we retest that price? The 42 high becomes support. You have bulls who missed the buy. They're looking to get long here. You have bears who took the sell. They had to scale in higher. They're hoping to avoid a loss. That creates support. We tested it on 59. We came close on 61. We came close on other bars, but ultimately we only tested that price one time, and we stayed above it. It was support. The trading range continued sideways, but whenever there's a trading range, I look to the left to see what led to it, and in this case, it was a rally. And so all through here, this trading range, it was tight. It went on for 20 or more bars. So you can say breakout direction is very close to 50-50. But because there was a rally leading up to it, I would be slightly more bullish in the direction of the subsequent breakout. And that's what we got. Leg 1, pullback, leg 2. And tight trading range here, 77, big bull bar, but not really breaking out of the range. And then bad follow through, 78. So not really ideal to buy here. Bulls will buy a deep pullback. You can see bar 76 was a bad stop order signal bar. We retested it on 79, and sure enough, we rallied for a second leg up. Leg 1, deep pullback, leg 2. It's really useful to pay attention to stop orders. That doesn't mean you have to take stop orders only, but viewing the market from the perspective of stop orders can be really helpful. For trades I took today, I only traded the first couple of hours, and I took 0 trades, and I had the same issue I've been having in the past. I only really set one order. I set one order to take a trade, and it was to sell at the bar 7 high. And on the SPY, the order actually would have triggered, but I had my limit order to sell there. In the last second, I changed my mind because I thought, but wait a minute, 9 through 12, and at the time, 13. At the time, it was a bull bar closing on its high. There was no bear bar. We have a 4 or 5 bar bull micro channel. That's probably going to get a second leg up. So rather than sell here, I'll wait for the second leg and sell it instead. And then, of course, just a few minutes later, I remembered, wait a minute, it was already 2 or 3 legs up, and even if it does need a second leg, it'll probably be a deep pullback and a delayed second leg. Plus, this is the defining characteristic of the day, so I'm a little more bearish, and you combine that with the higher time frame context as well. So I really think it would have been okay to sell there, and sure enough, it worked out. But that was it for me. Stop order trades today. I think it's reasonable to buy above 1 and 2, taking a chance. Sell below 4. Sell below, you can sell below 6, sell below 8. Tight trading range through here. Not ideal for stop orders. Maybe you sell below 17, but really not great. It's a bear bar closing on its low, but tight trading range, still above the moving average, and then bad follow through 18, you probably just get out. I think 24 is a reasonable sell, 25, 26, all okay. 31, 32, low 1, low 2, good signal bars, good context. You could sell 33, 35, 38. I think 40 is reasonable, 41, 43. You could buy the close, buy above bars. Very tight trading range through here. Not good for stop orders. However, bull breakout, sideways, looks like a breakout, pullback, second leg up likely. I think it's okay to buy above 56 if it triggered, but be quick to exit with disappointment if you did enter there. Bad signal bar 62, but makes sense to buy. It's a second reversal, 60, 62. Bears getting a failed breakout. Bulls still likely to get a second leg. We're reversing up at support. Same with 68. I think it's reasonable. 1, pause, 2 legs down, maybe even 3, micro double bottom. That's about it for stop orders. Limit order trades today. Maybe if you're aggressive, you sell the close or the hive bar 2 during 4, betting that bulls who bought were disappointed with 3 and they'll exit on the retest. It's also really important. You lose about, I think it's 20 to 30%. I'm taking this number from Ali. When you're looking at a static chart at the end of the day, you're really losing a lot of information. Momentum is a lot of information. How the bars form and the speed at which they move and how long they spend in certain areas. This is all important information. So I think Ali says you lose 20 to 30% of the information when you're looking at a static chart as opposed to a live market. So it's a lot easier, or I should say, some of the limit order trades I talk about make more sense when you're watching the live market and you can see the energy of the market and the momentum and how it's behaving in certain areas. And that's why if you ever look at Al's marked up chart at the end of the day on the Brooks Trading Course website and he has stop orders marked, a lot of times I've heard, people will say, well, who would ever buy there? The stop order is terrible. Why would anyone buy? Like, for example, bars 1 and bar 2. How could you possibly want to buy above 1 and 2? Well, we have a gap up and follow through. It's okay to buy, betting on a trend from the open, but once you get bar 3, you just get out. So it's okay to buy above bar 2, and you can avoid a loss if you're quick and you understand what's going on. And that's the same thing I was talking about on 56. Assuming it triggered, it doesn't look like it did here, but let's just say it triggered and you bought above 56. 57, 58 is not the follow-through you're looking for, so you can be quick to exit. It looks like we had bulls front-running the buy, buying the close of 56, disappointed with the tight trading range, follow-through, and they gave up, looking to buy lower. Limit order sell above bar 7, it's a bad stop order buy. Everything has an opposite, so a bad stop order is a good limit order. This would be a stop order buy, and it's bad, then that makes it a good limit order sell. 12 is a bad low 1, sell off, and then a deep pullback. Low 1 typically pulls back deeper because you have traders down here who sold the close of 9. Let's say you sold the close of 9. How do you feel about your follow-through? You're obviously disappointed. So we have bears who sold down here, they're trapped, and we have bulls who did not buy down here, trapped out of the rally. So that creates support below the market price. And that's sort of the logic behind why low 1s pull back deeper. So 12's a low 1, sell off, rally, but the signal bar is terrible. It's a bull trend bar, probably more buyers below the bar, and trap traders below, so there's support below the bar. Context doesn't really make sense to sell here. So therefore, bad stop order buy, good limit order, or bad stop order sell, good limit order buy. And that's what we got. Buyers below the bar for a scalp. Bulls buying here, no, this is not going to be, it's unlikely that this is the start of a bull trend. So they're buying here looking for a scalp, and that's what they got. There's a limit order sell in the sell zone of bar 13, 50% and higher. Looks like we pulled back to 75% maybe. Would have been sellers above 16. We didn't trigger, but another bad high 1 or a bad stop order buy, a good limit order sell. Tight trading range through here. Buyers below 13. After a second leg down, 1, pullback, 2, subdivided, 1, pullback, 2, pullback, 3. And again, we rallied for a scalp. Decent bear breakout, context was good. And weak reversal attempts, sellers above the bull bars. Traders will sell reversal attempts, knowing that most of them will fail, and the bears were likely to get a second leg down. So sellers above 29, sellers above 31. This was a micro channel all the way down, so no sellers above, and I would not sell above 40. This was a micro channel up, so buyers below the bars, but they were not able to enter. They were trapped. The bulls were trapped out, and they had to chase the market up. By the time we got here, sure, 46 is a bad sell. So maybe a 7 or 8 bar bull micro channel, small signal bar against a breakout, probably buyers below, but only for a scalp, because you have bulls who bought above 45, trapped on 46, and they're probably going to look to exit. That's what happened here. That's why we did not get far above 45 on 49. And then we entered a tight trading range. Sellers above bars, buyers below bars the whole way. Eventually, you have bulls buying here, trapped on bar 59. So bulls buy below 56. Tight trading range, we're at the bottom of the range at this red line. Bulls place limit orders to buy, and then they get this huge bear bar, and they're trapped. And then they use 60 to exit at break even, and that creates a small second leg down. And then you have the same thing, but the opposite direction. Maybe sellers above here, might be a 5 bar micro channel. Context isn't great, but let's say a trader sells above bar 62. They get trapped on 63, and now the high of 62 becomes support. We test it, and then we bounce. Same idea through here as over here. Tight trading range, limit order market, sellers above bars, buyers below bars. And then I mentioned this one earlier. Sellers above bars, it's a bad stop order buy, 76, but big bull bar, trapping traders. So traders place limit orders to buy the deep pullback, testing the breakout point, filled on 79, and we rally for a second leg. Where do we go tomorrow? Here's the daily chart. We have this bear bar, this is today, at the top of a trading range. Might be a bull channel. We're getting higher highs and higher lows. But to me, it looks like the market is converting into a trading range with lots of overlapping bars here and here. Big up, big down, big up, big confusion, and probably sellers up here. So I think the upside is limited. I think we'll probably find sellers above today's high, but we may not find sellers directly above the high. We may have to test the all-time high and see what's there first. But I do suspect we have sellers above. This rally is weak with dojis, opposite bars, and the context is bad, lots of overlap, and it's also a late leg. As far as below the bar, if we get below today's low tomorrow, it's a bad stop order sell, so that means I think it's a better limit order buy. It's a trading range bar in a micro channel. The first reversal will probably be minor, so probably buyers below here for a second leg up. Now, the one problem with that is this is already several legs up on a smaller time frame. A little more clear here. Rallying several times. But we'll see. All right, thanks everybody for watching, and I hope everyone has a good night.